Good morning, traders and investors. Roger Scott here, still the senior strategist for the Trading Pub. Why do I like saying that so much? I feel like a boxing broadcaster. In this corner, we have... Anyways, good morning, everyone. I hope everybody's doing great. It's about 7:41. This time change, this one preferably I like because you get to sleep an extra half hour. I don't get to sleep an extra half hour. I actually wake up an extra half hour earlier, but I get a little more time to spend doing this and getting ready, and I don't feel rushed, which is great because then I can relax and do a better job for you. Folks, before we get into all of this, make sure subscribe to my Telegram channel. If you don't know where it is, just go to rogerscott.com/Telegram. You can also subscribe to my YouTube channel and get all these goodies early in the morning when they come out before the market opens and get a really good gauge of what the market will do next. I've been doing this for quite a while. I've been told that I'm pretty good at it. Actually, it'll be 30 years in January. Can you imagine that? Where did the time go? And I'm 53. Ay, ay, ay. All right, so let's talk a little bit about the market. Let's figure out where we're at. What's the positioning? What did the market do yesterday? And what is the most likely outcome today in light of all the stuff we're dealing with? Now, a lot of folks are thinking we're really done with earnings, but we're not. We still have AMD today after the close, Pfizer, Caterpillar. Whew, that's a big industrial one. Amgen. And the thing about today is it's a very broad base. Look at this. You got energies, you got biotech or healthcare, you got industrial, you got First Solar, solar stocks, chippy stocks. You got another healthcare right there, and you have chips, big chip stock. So it'll be very interesting. And then tomorrow you've got more chips. You've got PayPal. That's consumer discretionary and tech. And Thursday you've got Apple and Square. So we still have plenty of earnings to go by, and there's still a lot of things to get through. Now, if you look at the S&P, and by the way, we're opening down, just to give you some perspective. The Dow's down about 95. This is kind of random. Nasdaq's down just to 12, not a lot. We're currently holding a position overnight in the day trading room, and that's the position that we have for Microsoft. And Microsoft is actually up about $2. Ooh, our position's up about $1.50, $2. I'm going to offset that in the morning probably, but I digress. Okay, so this is our third trade in the day trading room, and it's a third profitable trade. We've had a small winner, like a baby winner, a reasonable winner, and this will be a good size winner as long as it holds here. But let's talk about the market and what you can expect today. Now, it's very, very important for you to have a good idea of what the market's doing during the day, not just intraday like what's been doing in the last 5 minutes. A lot of this is randomness. Start with the daily chart. Notice yesterday we literally touched the 50-day moving average and we backed off. These averages are really good support and resistance levels. Now it looks like the market's going to open inside again. Notice the high yesterday was lower than the previous day's high, and the low was above the previous day's low. That's an inside day. Also, we're touching the 50-day moving average, just kind of sitting there, which means up till we'll probably see a breakout today one way or the other, at least tonight after earnings. But I'm expecting this to move one way or the other. As of right now, here's what you're dealing with. And I explained this yesterday, but I want you guys to see exactly what you're dealing with. And by the way, if we do come down, I don't think it's going to come down a lot. I think it's going to come down to the 200-day, fill these gaps, and then start coming back again. But here's where we're at right now. To the upside, the problem to the upside is we have this major resistance level right here, right below the 100-day moving average, right there, as you could see. Let me just draw a line right here. You've got major resistance right here, major resistance. And then on top of that resistance, you've got a 100-day moving average. That's a problem for the market, okay? You've got good volume. But again, this is a problem for the market. And again, we don't know if the news the next few days on earnings, which is really what's still driving this market, we don't know if it's going to be bullish or bearish. Also, what you have to the upside, to our advantage, is seasonality. So you've got a nice bullish trend. You've got good seasonality. You've got good volume. You've got a reasonable catalyst, and you've got a pretty good strength here, which can also be used against us. To the downside, you've got really strong resistance here. You've got a 100-day moving average. You're having an inside day, and we've got two gaps which are usually filled, at least one of them, before going higher. So while I'm not extremely bullish, I'm not extremely bearish. either. And I honestly think earnings is what's gonna take us over the edge one way or the other over the next week. But I think we can just kind of hover around here for a little while. And if that's the case, it's going to be swing trading season, because if we just sit around these little levels, if the meat of the day is right here, then how much range we're going to get? We need days like this. We need days like that to day trade. So again, that's what will help us decide if we're holding positions overnight or not. Again, less volatility, easier to swing trade. More volatility, easier to day trade. So again, I personally think we're going to touch this 50-day moving average today, but I don't know if we're going to break it. My suggestion for you is keep an eye. This is what I would do. Seriously, this not what I would do. This is what I'm going to do. I would keep an eye at 432, 490, 432.96-ish. Let's see what the low here is. 492. Actually, the low is 433.01. So below 433 or above 436. Yeah, 436.50. So if we break above, there's a good chance we're going to hit this resistance level, and then the 100-day will back away. And if we hit this 50-day, I think we're going to start breaking it and maybe just filling in here and then pop up back up. But remember, seasonality. Seasonality is the only thing we have going for us. But for seasonality, I would say there's a higher odds of the market going down and really going down. But I think with the seasonality right now, I think we are going to stick around here and maybe just come a little bit down and go back up. So I'm not expecting a lot of range. Also, you'll notice the bond market is above the 8-day EMA, which gives the stock market a little breathing room. When it's below the 8-day EMA, that puts a lot of pressure on stocks. It's now going above the 8-day EMA right here. That's the 8-day EMA exponential moving average. It's a short-term indicator, and it's been trading now 4 days above it, which is giving us a little bit of a relief, okay? In terms of the QQQ, the QQQ is actually looking a little better. The QQQ is trading already above the 100-day moving average. Again, you still have the same seasonality factors. Volume's been kind of low, but it's been low everywhere right now, waiting for these earnings. But you still have this resistance level, and this resistance level is at 373.76. If we can take this out, which we may be able to if Apple earnings and AMD earnings and PayPal earnings are better than expected, that's a big if. We'll start testing this area here, but we are seeing more strength in these stocks. Again, as I mentioned, earnings, AMD, Pfizer, First Solar, Caterpillar, Amgen, MPC. Be careful with these stocks. And then tomorrow, PayPal, Qualcomm, big chip stocks. San Diego right here. This stock built San Diego, no joke. And Thursday, you've got the biggest stocks. And then we're done. We're pretty much done with earnings. So we got to be careful. Let's talk about global economy, and then I'll get into sectors, all right? Investors digested weak Chinese trade data, comments from a Federal Reserve policymakers that tempered expectations of a speedy interest rate cuts by U.S. central banks. No, I don't think so. Dish. Oh, yeah. Remember my favorite stock? No, not my favorite stock. My favorite stock to short. Look at it the last couple of years, guys. How long have I been telling you to short it? Sometimes staying with the trend is very, very good. Their CEO finally gave up and left, okay? I mean, it's a running joke. If you're new to me, this is a running joke with my staff. I should get I love Dish t-shirt, but this has been my most shorted and the most attention-focused stock to short over the last couple of years. And finally, the CEO, Carlson, would step down November 12th. Even he's had it. I remember everybody was like, Roger, don't short it. They're restructuring. They're going to be... they're not doing anything. Kashkari stated on Monday, yesterday, I'm thinking it's Wednesday today. I don't know why. It's premature to declare victory over inflation despite positive signs of diminishing inflation. I agree with him 100%. He also stated that over-tightening is preferable to doing too little. Before we declare that we're absolutely done, we've solved the problem, let's get more data and see how the economy evolves. I agree with him 100%. The bond market's doing most of the work for them. They're in a pretty good place right now. They are not in a bad place right now, but they're going to wait a while. There's only a 14% chance that rates are going to go higher in January. I don't know. I can't predict that far, but they're not going to go higher in December. The Fed wants to give a little more room to the market. You've got Guild, Uber, DHI, eBay, Rivian, all of these stocks coming out. All right. So please be careful. Be very, very careful. Trade balance stands at negative 59 billion compared to 58 billion. It's only getting worse. It's not good for us. Europe is down. investors lackluster, not going to get tailwind from Europe, Chinese trade data, and more corporate results. Energy stocks are leading the market lower, and financial stocks outperformed. Go figure. China closed slightly lower after country's fresh data highlighted a continued slowdown in global trade and pointed to an uneven recovery. Well, look, they've been in COVID for double the time we have. Customs data showed that Tuesday, the Chinese exports in October dropped more than anticipated, while the country's trade surplus narrowed to its worst level in 17 months. Ouch. Japan closed lower as overnight increase in U.S. Treasury yield led investors to sell stocks to lock in profits following a recent sharp rally. And we're exactly on the SPY where we were, I think, like 3 weeks ago. I mean, we just went down and then right back up. All sectors in the Nikkei ended in the red, with utilities and real estate experiencing largest declines. As far as here in the U.S., folks, I'm going to tell you, I have never in my life seen a bigger mess with sectors. If you look at it over 6 weeks, you've got chips, retail, you've got speculative stuff leading right here. It's all speculative, and blue chips on the bottom. If you look over the last 3 weeks, you've got consumer staples, retail, utilities, technologies kind of sprinkled. Communication is all the way down, consumer discretionary. So you could see between 6 weeks and 3 weeks, they really took to the downside. And now, semiconductors over the last week, semiconductors, consumer discretionary, technology, QQQ, it's starting to come back up. Meanwhile, communication services is still down here. So to say it's a mixed up bag of, it really is. What I could tell you is this. About 6 weeks ago, tech was leading. Then in the last 3 weeks, tech really started weakening. And all of a sudden, the last 3-4 days, tech and chips, AMD reporting, Qualcomm reporting, consumer discretionary, tech, QQQ, it's starting to come back to life, which is one of the reasons why we're long Microsoft, because I wanted to give it exposure overnight because I thought the stock would go up, and the stock is now up about $1.50 above the price we got in, maybe $1.30, somewhere around there. But it's moving higher. But the point is, tech is on the run again right now. Now, folks, let me give you, today is Tuesday, and I always give you the strongest and the weakest sector. So the strongest sector right now, let me look at the chart. That's probably the best way to do it. So utilities are still running up. Retail, I don't know about this. It broke the downtrend, but it didn't really huff and puff yesterday. Consumer staples still looking pretty good. Home builders looks like they're going to fill this gap. Basic materials doesn't look all that great. The Dow's not looking bad. Technology. Look at technology right here. Tech. Looks like it wants to break above that level. QQQ looks like it wants to break that level. S&P because of tech and chip stocks. So right now, if I was a betting man, I would probably put my money on. The tech sector. So let's see what's looking really good. Ooh, Adobe. Look at Adobe there. Yeah, I want to see it go above these levels. Motorola. There we go. That looks great. And CBOE looks great. I like Motorola and CBOE. I also like Abercrombie. So I like this stock, ANF, I like CBOE, and I like MSI. Keep an eye on MSI the first hour of today. It may really move. And you may want to start looking to day trade that stock. Okay? To the downside, well, let me show you something. Let's go back here. Look at the Russell 2000. Most of these are holding on. The Russell 2000 and the energy sector is not. And also retail. Retail looks like it's kind of coming down. Industrial's not looking all that great. But honestly, I'm going to tell you the truth. Mid caps and the Russell 2000. So let's go to the Russell 2000. Let's look at the Russell 2000. Honestly, I'm being honest with you, I would just sell the Russell 2000. IWM. I think selling the Russell 2000 right here, especially if it breaks 171.12, would be a very, very good trade. Now, before I let you guys go, are you eager to navigate the markets with the understanding and the intelligence of a seasoned hedge fund ace, fed up with repeating trading pitfalls that have been Your nemesis for years, right? Behold the Pro Trader dashboard. It's a game changer. Now look, I've distilled years of trading wisdom into one powerhouse tool, meticulously crafted, with over 3,000 lines of code. The magic begins with a simple action. Paste a link into your Thinkorswim dashboard, and voila, that's it. You've just taken your day in swing trading to the next level. Embrace the clarity of price movement. Leverage the power of relative strength. Harness the distilled essence of my trading. It's all within your reach. Banish these overhyped, underperforming indicators and anchor yourself in strategies that really do resonate. This isn't just an edge. It's a quantum leaps in the markets that I've created for you. Folks, get into these signals. Stay the course, and the results will speak volume. Just click the link below, dive in, and I'll take you from here. Hope you have a great day, and please pay attention to this video. I'll see you guys soon.